Welcome to Globefolio. One of the stocks I recommend in my previous video on how to cash out from Nigerian stock market is Lasaco. So I want to quickly do a top-down analysis of Lasaco stock. Now, Lasaco is an insurance company. If you go to Nigerian Stock Exchange platform, you will be able to find information about Lasaco. But we're not here to talk about the business of Lasaco. But let me show you why Lasaco is a strong buy among the stocks that I recommend right now. So let me show you why it is strong buy. So let's start with top-down analysis of Lasaco by looking at certain key levels that Lasaco has respected in the past. I like to talk about key levels when I discuss stock analysis. Why is key level very important? With key level, you're able to check level of area of demand and supply in the market. And if you can find area of demand and supply in the market, I bet you will most likely know the perfect time to buy a stock. So let's discuss Lasaco. This is Lasaco's stock on charts. Lasaco right now is selling for 1.92, 1 naira 92 kobo. So it's still a penny stock that you can jump in right now before the end of the year. Now, notice how Lasaco has respected this particular key level. I have my key level at 84 kobo, which the stock respected in April 2022. You notice how the stock dipped back to that region before a massive pullback. So this is like a huge double bottom on Lasaco. So Lasaco has shown a long-term double bottom, and then this is a neckline. No wonder we saw a breakout right here. Now you can see the neckline on Lasaco, how that neckline was largely respected in 2018 and then 2021, 2022, and into August, like between January to August 2021, how this region has acted as key level right here. Now, you'll notice that when the stock completed its double bottom in December last year, look at the massive run up. Tasako eventually broke out of that neckline, and then on that single month, which was in June, Tasako delivered over 67% return. Now, on its way up, Tasako also respected another key level that was tested in January 2021. So I marked this region as an important region, which is 2 naira 51 kobo. Now, in between, we are seeing a pullback. So let me drill down to my weekly chart where you see a more expanded analysis. So you can see the huge, this is double bottom right here on Lasaco. This is a neckline. You can see the breakout. Lasaco eventually broke out of this neckline to rally from a 1 naira 67 kobo to reach a high of 2 naira 49 kobo. Now from there, Lasaco pulled back. Can you see Lasaco eventually pulled back and then eventually found support. So this area has acted as resistance in 2021. You can see right here, and now it's acting as support. So this is a strong buy from Lasaco. And when I draw out my Fibonacci retracement to connect the low of Lasaco to the high, you can see how the stock respected this key level. So let me quickly draw the region. Now, from the low to the high, you can see how Lasaco is actually finding support around 50 to 60% retracement. Now, it's considered a significant level in an asset when an asset has retraced by 50 to 60%, and that 50 to 60% is corresponding or is also acting as an important key level. You can see how this key level had been tested multiple times. So this means that Lasaco is a strong buy at this period. Lasaco is a strong buy stock you should quickly watch out for. And then I also discussed Lasaco as one of the high yielding dividend growth stock that you should pay attention to right now. So if you look at all this together, it means that there's a huge upside potential on Lasaco. So let's quickly look at the financial statement of Lasaco. Lasaco is one stock that is actually on track to beat its previous year. Its trailing 12 months is already more or far higher than the previous full year, which is 2022. That means if you add the last four quarterly revenue, net income, and earnings, Lasaco is already on track to beat its previous year. So let's look at the numbers on Lasaco. You will see on the numbers how that the gross premium moved from 8.8 billion to 10, underwriting expenses 1.7, and then underwriting profit 1.65 to 1.6, profit before tax 407 to 545. This is 6 months. Then profit after tax from 376 to 496. Earnings per share, you can see from 5 kobo to 27 kobo. Then if you drill down further, so let's see the breakdown of Lasaco Q2 earnings on the financial statement. So this is Q2 earnings of Lasaco. Yes, April to June. Now, for an insurance company, you need to be very, very careful. When you're analyzing an insurance company, don't just be too don't be in a haste to just look at the numbers like revenue, profit before tax, profit after tax. No, that's not how to analyze an insurance company. If you want to analyze an insurance company, pay attention to the core numbers that is specific to its line of business. So, in one of my videos, I discussed how to analyze an insurance company, and one of the things I talked about is combined ratio. Combined ratio. An insurance company can be profitable at profit before tax level, but if you look at the business of insurance itself, it might actually be a loss-making business. So I want to be sure that Lasaco is not just making money, but it's also collecting more premium than it's paying out as claim and as underwriting expenses. So what I do is I'll look at the net premium end, which is 1.9. You can see between April to June 2023, Lasaco collected 1.9. And then between April to June 2022, this is 2023, 2022, Lasaco collected 1.4. That was an increase of almost 4 to 500 million naira, which is very good. So let's see 1.9 minus 1.4. That's almost 0.5. 0.5 divided by 1.4. That's almost 35%. So Lasaco grew its net premium income by 35%. Net premium income is very important because that is a premium that you can actually account for in the current financial year, not gross premium written. Because out of this gross premium written, there are unearned premium that is also part of it that's actually paid to a reinsurer. So I pay attention to net premium income. This is what the insurance company earned during that financial year. Then I look at the net claim paid because when they collect premium, they're expected to pay their policy holders for losses incurred. So Lasaco paid 420 and then underwriting expenses 1.3. So what I do is I'll add 420 to 1.3. That gives me 1.7. So as long as the total 1.7 here is lower than the claim of 1.9, it means the combined ratio is below zero. So combined ratio is when you add net claim plus underwriting expenses divided by net premium income. Any number below zero, below one, sorry, means that the insurance company is profitable. That means they are actually collecting more premium than they are paying out as claim and underwriting expenses, and that gives them access to extra cash. Now, if you look at the previous year, 1.4 and then that's net premium income. Then you can see what they pay out 389 and 58553, so which is 943. That's also lower. So I like to buy into an insurance company that has its combined ratio less than one, meaning that whenever I see that the company is collecting more premium, just like you see here, than is paying out as claim and underwriting expenses, it's a sign that this company is profitable. Don't just jump in to say profit after tax went up. No, look at these numbers. Now, once you have done this, I can then go ahead to look at net investment income from 206 to 204. Now, if you pay attention to an insurance company financial statement, you will see that there are some insurance company that they're actually paying more as claim. That means when you add their net claim and underwriting expenses, is far higher than net premium income. Now, because they are earning more from from investment income, they will most likely declare profits. Now, if you don't pay attention to these numbers, you will likely think that the insurance company is good or is the best to buy, and then you jump in. Why? Because you're saying profit before tax, not knowing that there's a red sign. So, an insurance company can be profitable and at the same time can be in danger, meaning that the business of insurance itself is not profitable. So, you just hear one morning or a breaking news that this company has packed. Why? Because you didn't pay attention to the numbers. So always pay attention to combined ratio. Saying once combined ratio is settled, that's fine. Then the rest you can then drill down and check. So overall, Lasaco did extremely well at the profit before tax level, which went from 78 in 3 months 2022, second quarter 2022 to 204. You can see this is an impressive growth, 204. They were able to cut down operating expenses from 1 billion to 700. And then you'll see other income went from 41 to 385. And then loss on investment to 13 to 37, investment income, blah blah blah. So at the end of the day, it's the whole numbers are good, it's solid. So from the fundamental perspective, Lasaco is doing well. So there is also something I like to do when I analyzing a stock. So I try to also look at the sentiment behind the company's stock. Sentiment is also very key. What is sentiment? Sentiment is what investors emotions are towards a stock, whether sentiment is largely positive or negative. So here, Lasaco is one of the high yielding dividend stocks to pay attention to. You can see right now. Now, dividend yield on Lasaco right now is around, let's look at it, it's around 8.52. And Lasaco paid dividend per share of 0.15 in previous year. So if they continues to declare profit in third quarter and then final quarter, this should help the company declare more dividend or pay out more dividend, and then that should also attract positive sentiment. So, meaning that if we look at the expected increase in dividend against the price you're going to pay right now, it's actually going to give you an average of 9% to 10% yield. That's what you have on cards. Then, if you look at the performance of Lasaco in the last 3 to 6 months, you will see that Lasaco has delivered 28% return in last 3 months. In last 6 months, it's done over 80%. That means sentiment on this stock is largely positive. So if I want to look at the sentiment of a company stock, I look at what investors' emotions are. The only way you can understand an investor's emotion towards a stock is to look at the performance of that company stock. If investors like a stock, it should go up ordinarily. If investors don't like a stock, it should go down. So I don't want to buy into a stock that investors don't like. That's why I will always want to stick to companies with good fundamental. So this is my take on Lasaco. So from here, if Lasaco eventually recovers from this key level, because we're going to see the company struggle around this key level for a while, but I don't know. Then, if the company eventually bounces back from this level, we should see Lasaco head back to 2.51 from 1.8, and that will give us an average of almost 38% return from on investment if you do that. And then if eventually the company breaks out of this region, then that should take the company higher. Now, one thing I'm so sure about this company that is giving me confidence is the fact that it has completed a double bottom, a long-term double bottom, and then with a break of this neckline. So that means going forward, Lasaco should be extremely profitable. We should see the stock rally higher in weeks and months to come. So this is my feedback on Lasaco. If you own Lasaco stock, hold on to your company stock. If you don't own Lasaco, it's actually the best time to buy into Lasaco. Lasaco is a dividend growth stock. So I just took my time to discuss this stock and give you in-depth analysis of this kind of company. So if this is the first time you're watching this channel, kindly hit the subscription button, turn on the notification bell so that when I release more videos, you'll be able to get notification and quickly jump on the stocks that I recommend. And then I have a community. So if you are yet to join my community, drop a comment on this video. I will send my email. You can chat me up and then we can discuss on how you can join my community. In my community, I share recommendations, we host webinars, and then I share market updates. And then you can also have access to my courses. I've uploaded courses, especially the Lasaco that I just talked about now. If you understand how to analyze insurance stock, you should understand what I mean by combined ratio. So on my platform right here, if you go to courses, you will see how I analyze insurance stock. So this will take you from ground up, be able to understand how I analyze insurance company stock by looking at the numbers. And one of the best place to find profitable penny stock is insurance. But if you're not careful, you might jump on the wrong stock. So how do you know the best stocks to buy in the insurance sector? By going through the video guide that I'm going to share right here. Thank you. May the markets be with you.